Hello and welcome everybody to the weekly market forecast for Wednesday, June 21st. This webinar is brought to you by OctaFX, the award-winning Forex broker who offers some of the lowest spreads in the industry. So first of all, thank you all for being here today, and without further ado, let's jump into today's presentation. A couple of quick disclaimers quickly. We have a risk disclaimer. Trading foreign exchange or margin carries a high level of risk and may not be suitable for all investors. You should not invest money that you cannot afford to lose. Secondly, a hypothetical trading disclaimer. The information in this webinar is provided as general market commentary and does not constitute investment advice, and by that we mean that we're not giving out specific trade recommendations. It's more of an educational webinar to help you learn to trade successfully yourself. A little bit about me, Dan Blystone, FX market analyst. Worked on the floor of the Chicago Mercantile Exchange, started my career out in the currency futures there. I was a former professional futures trader, a couple of different prop trading firms. Also worked as a retail futures and Forex broker, Series 3 licensed broker, so I have a bit of insight into that side of the business. Finally, I started a website called traderslog.com, just an educational website covering trading in the financial markets. Right, next up, this is a technical briefing. We're going to be looking at strategies and trade ideas and chart patterns, but always good to be aware of the economic releases that are coming out. It's a relatively light week for data, but we do have a couple of important figures today. 3 p.m. GMT, we've got existing home sales. May have a light impact on the US dollar. 3:30 p.m. we got crude inventories. The weekly figure covering crude oil. If you're trading crude oil, you're going to want to watch that one. And finally, the biggest figure of the day at 10 p.m. GMT, the Reserve Bank of New Zealand official cash rate. So it's their interest rate statement, and they're going to be announcing their key interest rate and also making a statement about it. So that's a really important one if you're trading the New Zealand dollar. Let's take a look at what we're going to cover today. As usual, we're going to cover key support and resistance levels. We're going to look backwards and forwards, covering both recent and emerging chart patterns. We're going to look at technical indicators, and we're going to look at trading strategies. And let's dive in a little deeper and look at the key takeaways that I'd like everyone to take away from today's presentation. We're going to learn about trend lines and patterns using trend lines. Flags, channels, that kind of thing. We're going to look at multiple time frame analysis, a very important tool for if you're trading strategies, and moving averages, moving average crossovers, momentum oscillators as a secondary filter we're going to be looking at today. And finally, we're going to touch on Fibonacci. We've got an interesting chart displaying an instance of a nice Fibonacci retracement, and we'll get to that when we get to the charts. Next up, let's talk about, we're going to do a little trading strategy recap of what we talked about last week. We had a strategy called the inside bar plus stochastics trading system. It's using a 15-minute time frame. Currency pair, the market that we're looking at for this system is the euro against the dollar. Pretty simple system. It's just using stochastics and the inside bar, pure price action indicator there. And let's take a look at the rules quickly. When the stochastics or the Stokes are below 20 and starting to curve up, look for an inside bar for a possible buy. So an inside bar is a bar that is contained entirely within the prior bar, and we'll illustrate that concept when we get over to the charts. But let's just go through the rules here, and then you'll be able to refer back to these later if you want to, because this webinar is being recorded. So again, when the Stokes are below 20, starting to curve up, look for the inside bar for a possible buy. Wait for the next candle after the inside bar to go 1 to 2 pips higher than the high of the mother candle. That's the first candle in the sequence to enter long, and it's the inverse for a sell setup. So we'll look at an instance of that in the chart in just a minute. And next up, we're going to introduce a different strategy. We're looking in the silver market today. It's using a 5 and 10 period exponential moving average crossover plus using oscillators and multiple time frames as additional filters. The systems using a longer time frame is using the daily chart for entry, and we're looking at the weekly chart for trend confirmation. The market we're looking at is silver, ZAG USD. It's been a very nice trending market. When you're using moving averages and trend following systems, of course you're going to want to trade in a market that's nicely trending over a set time frame. And what I had observed is that silver was trending very nicely over the daily time frame, so it makes a good market to trade this strategy. Indicators we're using are the 5 and 10 period exponential moving averages. Just as a reminder, the exponential moving average is simply a moving average that puts greater weight on the more recent periods as opposed to a simple moving average. We're also going to look at a couple of different momentum oscillators, stochastics, and the MACD stands for moving average convergence divergence. Okay guys, let's go over the rules for this system. Again, you'll be able to refer back to this later if you're interested in testing out this system. Always recommend that you test trading strategies, trading systems on a demo account and get a feel for them before you do anything in the live market. But in any case, here goes with the rules. The entry takes place on the crossover, the 5 and 10 period exponential moving average on the daily chart. We're looking at the two momentum oscillators for filters, so we want to see stochastics pointed upwards. We want to see MACD, the moving average convergence divergence, flat or increasing in value. Now here's where the multiple time frames come in. You're going to want to favor buy signals when the weekly chart is in an uptrend, and then the inverse of all of that for a sell signal. So without further ado, let's jump into the charts. And we're just going to go through some of the major charts quickly before we go into discussing those trading strategies, which we'll do towards the end of the presentation. Starting out with gold here, we're looking at the gold daily chart. Interesting market, nice trending market here. We can see a nice instance of the classic 5200 period cross over here, the death cross. We see price contained within a very well formed up channel here, and we can see a double top has formed here. It's a very important horizontal support level here. And looking at price, we can see it's actually poked through this major trend line, which forms the lower trend line in the channel up here. But look what happened. Found support at the 200 period simple moving average. So 200 period simple moving average is often described as the line in the sand. It's possibly the most important technical indicator. We're looking at a major time frame here, daily chart. So just keep in mind, above the 200 is viewed by many analysts as being a more bullish indicator, and if you're below it, you're more in the bear territory. So we've actually got a possible inflection point taking place right here because price is retraced to the 200. Looking at stochastics, the momentum oscillator, it's showing us that the selling momentum appears to be exhausted. It's gone into the oversold area, and it's actually curving and turning upwards again. When the stochastics cross this 20 level, that's typically interpreted as a very bullish signal. So we've got support right below us here. If we see price, we see the stochastics cross above 20 here, that would be another potential good entry place. So we got a possible good long position developing in the daily gold chart here. Next up, let's look at the big major currency pair here, the euro against the dollar. Again, we have interesting horizontal resistance to the upside here. We can see that this was an important level here. It got tested here once, and look what happened again just in the last few days. Price reached up, and where did it go to? The exact same spot as it went to back here. So this was an important level before. It's now an even more important level. We got kind of a range-bound market on the daily time frame here. A lot of consolidation in price below this level here. And we also have a minor trend line to the downside here, providing some support. Below it down here, we can see the 200 period simple moving average did come into play. And below it here, we have a nice uptrend line. We're going to be talking about inside bars and inside bar trading strategies, and there's actually an instance of the inside bar here on the Euro daily chart. We have this bar contained within this bar, so we have an inside bar here, and we also have a potential setup with the stochastics here. So if we can see the stochastics curve and turn upwards, break through the 20 level, we have a nice potential long signal with the breakout to the upside here, the breakout above the top of the mother bar here for a potential long signal in the Euro on the daily chart. Price breaks through to the downside below this this support here, we might see a nice fluid move lower, possibly testing the 200 period simple moving average again. Switching over to cable, looking at cable again, we have another nice horizontal resistance level up here. Big consolidation in price going on here, price coming down here, looking to potentially test this 200 period simple moving average here. So looking quite similar, both the Euro and the British pound, in that they're kind of stuck below this major horizontal resistance to the upside, but still trading above the 200 period simple moving average. Next up, I pulled up the Aussie against the US dollar on a longer term time frame. I do this because I think it's a good idea to encourage traders to look across multiple time frames, look what's going on in the monthly charts, the weekly charts, and here we got a really interesting instance of major resistance to the upside. It's been tested multiple times, and we got some nice support to the downside here. So we got some nice trend line action on the monthly chart in the Aussie, and if any breakthrough above here, you might see substantial follow through or a nice fluid move to the upside. So it's always good to keep in mind what's going on in the longer term time frames. Such a nice channel in the dollar CAD that it stretches back all the way through the weekly chart. Again, we're at a potential inflection point here because prices come down. It's testing the lower trend line of this channel, and let's see what happens with the crude inventories. That might shake things up, with the Canadian dollar being a commodity currency, which is tied to the price of crude oil. Next up, we're going to talk briefly about Fibonacci. We talked about how there's going to be the RNBZ, the Reserve Bank of New Zealand, rate statement later today. And what's going on in the Aussie, one of the currency crosses are pairs that do not contain the US dollar. So the Aussie against the New Zealand dollar, currency cross, again, we've got that major figure coming out today. And what we see in the New Zealand dollar, we got that major figure coming out. What we see in this pair is we have a nice fluid down move from swing high to swing low, and we saw a textbook retracement here when we draw the Fibonacci levels up here. So in the Aussie against the New Zealand dollar, we saw price retrace exactly to the 38% level. That's a Fibonacci level, and so it'll be interesting to see what happens later on today when that news comes out with what the RNBZ is going to do with their interest rate and their general policy outlook, which may shake things up. Another really important level, guys, to be aware of is the 50% level. It's not a Fibonacci level, but they put it in here, and in my experience, it's a bit like the 200 period simple moving average. It's uncanny how price bounces off the 50% level, so I do encourage you to check that one out across multiple time frames. It's a really valuable tool in my view. Next up, let's jump into our trading systems. We're doing a recap of what we talked about last week with the inside bar stochastic system. So here again, we have an instance of an inside bar, this bar being contained within this prior bar. And what we're also looking for as a secondary filter in this system is for the stochastics, the Stokes, to be moving down from above 80 to below 80, pointing downwards. And in this instance, we got a sell signal. The entry is a couple of pips below the low of the mother bar, which is the first bar in the series. So we would have had our entry here, 15-minute chart. So this is a shorter term trade time frame, and it would have been good for potentially 15 pips more or less off of that trade. So that was a positive instance of this, a successful instance of a setup with this trading strategy. Keep in mind, guys, that on the shorter term time frames, you're going to get more trading signals but they're going to be less reliable. Longer term time frames, typically there's fewer signals, but they're more reliable. So there again, instance of the inside bar. Just keep in mind, it's interesting when you see something, when you see this bar contained within the prior bar. Next up, let's look at our next trading strategy. When you're looking at these moving average trading strategies, you want to be in a trending market. So it's worth it just to go through all the different markets and see which markets are trending nicely, and not only that, which time frames, over which time frames they're trending nicely. So the silver market has been trending very nicely on the daily time frame. So that's a good one to trade with a moving average system, in this instance a moving average crossover system. Again, we're looking at the 5 and 10 period exponential moving averages. We're looking for a crossover on our given time frame, which is the daily chart in this instance. Here we can see we had a nice EMA cross here and a really fluid, beautiful down move off of that on the daily chart. It's a very different type of trade from the inside bar setup that we just looked at. In my view, this one's more interesting. The other filters that we're looking at for this system, remember, we're looking for confluence with both of the stochastics and the MACD. So we can see in this instance, stochastics were pointing downwards, coming from above 80, which is a good thing. MACD was more or less flat and heading downwards, so we were all good to get in this trade. The final thing that we want to look at is that we want to favor trades that are in the direction of the trend on a longer term time frame. So let's take a look at what was going on in longer term time frames in silver. Let's take a look at this chart. So when you take a look at this chart, you might say, well, I can't really tell what the trend is. You know, it kind of goes up here, it goes down here. I mean, I can see there's kind of been a downtrend here. So when you look at a long-term chart, how do you identify what the trend is? Well, a useful tool for that is just to throw up a longer-term moving average, like the 200 period simple moving average, and look at the direction that it's sloping in. So in this case, we've got the 200 sloping downwards. So it's telling us basically that over this time frame we're in a downtrend. It's not an extremely sharp downtrend, but it is sloping downwards. If you want to get even more into your multiple time frames, you could zoom out to the monthly and take a look at the monthly. My moving average didn't only goes back a certain distance, but we can see that also on the monthly chart we're in a downtrend. So what does that tell us when we're going back to the daily, where we're looking at our entry trigger? Which side of the market should we trade? Which side of the market should we favor? So we're in a downtrend on the weekly, we're in a downtrend on the monthly. It's telling us that we're going to favor sell signals, right? Being in a downtrend. So we would favor this signal over this signal, even though it was a nice crossover here and there was a nice up move off of this also. And we also had the stochastics and MACD working in our favor here, but we did not have the multiple time frames working in our favor. So I think the takeaway from looking at this system is keep in mind that these systems work great in trending markets, but not so great in sideways markets. So it's good to be aware of which markets are trading and which markets are trending and over which time frames they're trending nicely. And again, you can use the tools of multiple time frames to help you out with that. That's about all we have time for today, guys. If you have any questions for me, you can email them to me at webinar@OctaFX.com. I want to thank you all very much for joining me today and look forward to seeing you next time. Bye for now.